numbers for the quarter are industry leading. Let me give you some color on these numbers. The net profit for the quarter stands at 7,627 crores. It has witnessed an increase of 66.73% on a YOY basis, and it is the highest ever quarterly net profit till now. Operating profit has increased by 9.84% YOY basis. Net interest income has increased by 10.65% YOY basis on the back of improved asset quality. Domestic NIM has improved by 16 basis points on a YOY basis. Non-interest income has declined marginally by 3.75%, mainly because of the lower trading gains from our treasury operations. However, our core fee income has remained intact. Operating expenses for the quarter have increased by 5.25% because of increase in overheads, driven by increased activity level at the branches as compared to quarter 2 of the last financial year. Domestic deposits have seen a growth of 9.69% on a year-on-year basis, with higher growth coming from CASA deposit. Current account deposits grew by 19.20% and savings bank deposit grew by 10.55%. As a result, our CASA ratio has improved by 85 basis points on a year-on-year basis. On the retail advances front, the personal credit has grown by 15.17%, with home loan book growing by 11% and other personal loan book growing by 22%. Corporate advances have witnessed a muted scenario. They have actually declined by 3.91% year-on-year basis as the utilization of working capital limits continues to be low. Deleveraging and lack of fresh investment by the private sector has led to prepayment and lower offtake. RBI survey, which provides a snapshot of demand conditions in India's manufacturing sector, also show a decline in capacity utilization in the manufacturing sector during April-June 21 quarter as compared to previous year. As far as my information goes, even capacity utilization stands at around 60% even now, and our unutilized limits are as high as about 50% plus as far as large corporates are concerned. However, credit demand appears to be on the rise with increasing economic activities across India. The corporates too have started planning for future investments which will create demand for the credit going forward. Coming to asset quality, the outcomes in this quarter have been quite encouraging. The first quarter saw elevated level of fresh slippages as collections were severely impacted due to restrictions on mobility and concerns around health and safety of our staff as well as customers. However, our ground level forces have rallied back in the second quarter, and slippages for quarter 2 of financial 22 stands at 4,176 crore with a slippage ratio of 0.66% only for the quarter. Lower provision requirements have also led to low credit costs at 0.43%. Our GNPA levels have dropped below 5% as at the end of quarter 2 of the financial 22. On the restructuring front, in the first phase of COVID restructuring, we had restructured loans with aggregate outstanding of 12,995 crore. In the second phase, we have implemented restructuring for loans with aggregate outstanding of 17,317 crore. As such, our total restructuring book under COVID resolution plan 1 and 2 stands at 30,312 crores, which represent only 1.20% of our loan book. We have also made additional provisions against these restructured loans over and above the regulatory requirement. As far as our foreign offices are concerned, they are performing very well in this financial year and have registered good growth in deposit as well as in advances. Deposits have witnessed a growth of 12.48%, while advances registered a growth of 16.28%. The growth in advances is coming from all the major geographies such as New York, Shanghai, Tokyo, Sydney, Singapore, Frankfurt and Hong Kong, mainly from oil marketing companies, banking and financial services, e-commerce and low-risk government-related entities. We are focused on consolidating and increasing our book size in the key geographies. We have a comfortable capital position with the capital adequacy ratio well above the regulatory requirement and our internal accruals are expected to take care of our normal wages growth requirements. Considering adding the net profit for half year, the notional capital adequacy ratio works out to 13.96%, which is above March 21 level. We have also raised 81 bonds of rupees 6,000 crore in the month of October. If we reckon the 26, almost about 26 basis point on account of the 6,000 crore, the capital adequacy ratio will actually become 14.2%. So from that point of view, we are quite comfortable. In the digital space, we have been continuously expanding the bouquet of our digital offerings to not only provide seamless digital journey to our customers, but also enable data-driven decision making in the various acquisition. Some of the features added to YONO app during this quarter are NPS, end-to-end process on the mobile app, automated assistance on first login, SIM binding based registration on YONO, which will further enhance the security aspect, Shuffle, which is simple and fast agri loan for the dairy. During the quarter, we have opened more than 27,000 savings bank accounts per day to YONO. Disbursed more than 5,400 crore for the pre-approved personal loans and also logged in rupees 5,000 crore worth of mutual fund sales through YONO. We have also developed analytical models for AI-driven loan underwriting, facilitating digital lending and driving operational efficiencies. SBI's digital loan portfolio generated is at rupees 8,148 crore in the first half of the financial year 22. Analytics also remains an important utility with propensity model based lead generation, which actually generated 11,500 crore worth of asset readiness in the first half of financial year 22. Beyond this, cross-sell of JV product is also facilitated through the analytical models. AIML has been employed across many functions of the bank, from optimizing footfall in the branches to prescribing branch-level actions for optimizing cost-to-income ratios. Profitability is also being improved through AIML with natural language processing being used to identify charges not levied in loan accounts and to identify suitable locations for ATMs. We are proud of the value that our subsidiaries have created for all the stakeholders and most importantly for our customers. We have subsidiaries which have scale and are leaders in their respective segment. We will continue to nurture these subsidiaries and see them taking rapid strides. Overall, it has been a good performance and we expect further improvement going forward. With these remarks, I would also like to wish all of you a very, very happy Deepavali. And now I open the forum for the questions. Thank you.
Thank you for your address, sir. I now request the media to raise their hands for the questions and accept a request to unmute yourself on being called. We request Joel Rebello from the Economic Times.
Can you hear me, sir?
Yeah, you're audible.
Happy Diwali to everyone at SBI and all on this call. Sir, a couple of clarifications. There has been an improvement in your provisions. You said the slippages were 4176 this quarter. How does it compare with the last quarter and the last year? I mean, just there's a sense of why the improvement in asset quality, basically. Is it because slippages are lower, or is it collections have or recoveries have been quick? You can just give a perspective on why provisions are lower and slippage.
See, the first quarter of this financial year, we had slippages on the retail segment and we could pull them back in no time. And that is something which is the reason for much lower slippages. And also the accounts are performing well. So whatever distraction was there on account of the first quarter stress, that has gone away. And also our ground level forces have also improved their collections. Now our collection efficiency stands at about 95%, and we have got our collection calls have gone up multifold. So that is the other reason. So our connect on the ground has improved. That is the reason there are much lesser slippages, and we're in a position to showcase much better performance.
So just wanted a number for the first quarter. What was it, sir? Just want to clarify.
15,666 were the slippages in the first quarter of this financial year.
Recoveries also were good this quarter. I mean, just wanted a sense on the recoveries also. Is that one of the reasons why NPAs are down?
Sorry, I couldn't get your question, please. Can you repeat your question?
Hello?
Yeah.
Can you hear me, sir?
Yeah, I can hear you. Yeah, can you repeat your question?
Was it also the fact that recoveries were better this quarter? Is that one of the reasons why NPAs were down?
Yeah, that is one of the reasons. Very much.
Okay. Second question I had was on corporate growth. You touched upon it in your opening remarks. We know retail has done well so far. You said that the capacity utilization was still at 50%. So, is there demand? First of all, what was the year-on-year growth in the corporate side? Was there still a degrowth, or have we seen some growth this time?
Corporate side, we still have a degrowth, and when it comes to see I'll just give you a broad color. As
Yes,
far
sir.
as term loans are concerned, we have got the undisbursed term loans almost to the extent of 27%. Working capital limits in the large corporates are unutilized to the extent of almost 50%. But
Right.
we have got a situation where we have got a pipeline of about 1,15,000 crore already, which is there. And we expect that this term loan also, which is undisbursed as of now, which is 27%, almost as high as about 2,25,000 crore. That also we will see some availment of these term loans, because there is a very clear visibility of the demand. With the demand coming in, the capacity augmentation is happening. And I hope that by the end of the current quarter and maybe by the end of next quarter, there should be a significant improvement in the capacity utilization, which will lead to availment of these term loans, and also some kind of a working capital availment will also improve. So these are some of the, I would say that these are my expectations, and hopefully we'll get to see the corporate credit also coming back.
So one last question I had. Earlier this week, we saw this unfortunate event of police high-handedness. A former SBI chairman has been arrested. It looks as a very, very unfortunate thing. I just wanted a perspective. I know the bank has released a statement. We have all gone through it. It's been a very clear statement, but just wanted your perspective or your thoughts on this, because this is a very serious issue. This is the largest bank we are talking about, sir.
Well,
राइट सो दैट वाज दिनेश खारा बता रहे थे बेसिकली कि किस तरह से उन्होंने टर्न अराउंड किया है, और टर्न अराउंड इनफैक्ट किस तरह से प्रोग्रेस हो रहा है आगे, नंबर्स में काफ़ी एविडेंट है। SBI के ऊपर मानस, SBI अभी मेरे एक फ्रेंड ने मुझको एक मैसेज किया कि SBI का क्वार्टरली प्रॉफिट करीब 9,000 करोड़ के पास है, और कोटक का रेवेन्यू, क्वार्टरली रेवेन्यू 8,000 करोड़ के आसपास है। उतना फ़र्क है, जिस कोटक का रेवेन्यू इज़ ऑलमोस्ट इक्वल टू SBI का क्वार्टरली प्रॉफिट, और मार्केट कैप देखिए तो लगभग आसपास ही है। आपको क्या लगता है मानस, चार्ट्स पे अगर अगले दिवाली तक का कॉल लेना हो, कोटक बैंक 2050 और 530 पे आपका SBI, तो अगले दिवाली पे लॉन्ग टर्म चार्ट्स में कहाँ पे उम्मीद है आउट परफॉर्मेंस आने की, मानस?
देखिए लॉन्ग टर्म चार्ट पे अजय, मेरे ख्याल से 360-70 के आसपास का ब्रेकआउट हमने करीब 7-8 मंथ पहले देखा था स्टेट बैंक ऑफ इंडिया में, जिसके टारगेट 525-550 की रेंज में आते थे। तो लॉन्ग टर्म और मीडियम टर्म के लिए तो वो टारगेट अचीव हो चुके हैं। मैंने अभी थोड़ी देर पहले भी SBI के बारे में जिक्र किया था, और तब ये बोला था कि शॉर्ट टर्म के हिसाब से आप खरीदारी कर 575 से 585 के टारगेट तक। तो बहुत बड़े टारगेट लॉन्ग टर्म के लिए तो नहीं आते हैं, लेकिन अगर लॉन्ग टर्म के लिए खरीदारी करनी है और मेरे पास केवल 2 स्टॉक है, तो डेफिनेटली मैं कोटक बैंक के साथ जाऊंगा, क्योंकि यहाँ पर लॉन्ग टर्म चार्ट से ब्रेकआउट जस्ट अभी कुछ दिन पहले आया था, जिसके टारगेट 2350 से लेकर 2400 तक आते हैं। तो अगर लॉन्ग टर्म के हिसाब से खरीदना है तो डेफिनेटली इस करेक्शन पे कोटक बैंक में खरीदारी करिए। 1875 के नीचे स्टॉप लॉस रखिए, और टारगेट ऊपर की तरफ करीब 2350 से 2400 तक आपको देखने को मिल सकते हैं।
उसकी बात करें